Hello everyone, I am Pratap here. We are at lesson 29.2. It is about how to use NeoStock Software generated daily income trade, bullish or bearish trade setup, supported supply demand zone reports. And these reports are generated by our NeoStock software. And before we get into this analysis of the charts, all of you please look into the disclaimer. I am not a SEBI registered analyst. All the views and analysis posted in this channel are only for education and learning purpose. And viewers should take their financial advisor's assistance before making any buy or sell decisions. Hope I made it clear. So that means the analysis I am doing in this video is only for learning purpose and also understanding of how NeoStock software is generating the reports and how these software reports you can make use when you are planning your own trading decisions. Always remember, software, the main uses of the software is to improve the efficiency of a trader. You are all supply demand zone traders. To analyze 240 stocks and finding the stocks that are supporting DIT, daily income trade, bullish or bearish trade setup, it may take several hours of time or sometimes maybe few days of time or maybe 1 or 2 weeks of time to analyze all the 200 stocks. Same thing, a software can complete the task in fraction of few seconds time. So this is the way the efficiency of the trader will be improved rather than analyzing 200 stocks. Now you can do your analysis only the 10 or 15 stocks. The software is showing you the results. That means our analysis work will be done by the software. Whatever the final results it is displaying, those zones you can analyze according to the concepts you learned in supply demand zone price action. That way you can take your own trading decisions quickly. This is the way your efficiency will be improved. Your profit taking or profit booking related concepts will be improved. So this is one important point you should observe. And the second important thing is daily income trade setup. You should have dependency on some of the training lessons you learned at our free training course. Which training lessons you are having dependency? Let me explain. First, how to get into our training course at NeoStock Software. Click on the playlist. Once you click the playlist, you will be seeing all the playlists available at our channel. And our course is available in the playlist Supply Demand Zone Price Action course. So view the complete playlist, click on that view full list. Now we got Supply Demand Zone Price Action course playlist. All the training lessons are available, and you should start our training from lesson 1.1. And also I kept all the training lessons in an order so that one by one in an order you can learn. And you also know you should learn this course according to the training instructions mentioned at our Telegram channel. I also provided the link to our Telegram channel in the video description. In the Telegram pinned messages, Telegram channel pinned messages. At the top of the Telegram channel you can find pinned messages. If you click that pinned messages, you can see all the training instructions. The rule number 1 is you should complete phase 1 and phase 2 training lessons according to the training instructions I mentioned at our Telegram channel pinned messages. Then only the usage of our software generated reports will be effective. If you don't follow my training instructions directly, if you are using software generated mistakes, sometimes you will be making mistakes. You may not be using the software generated reports in an effective manner. So complete phase 1 training program, especially the bullish and bearish trade setups. Apart from all the lessons, it is having more dependency on trend related concepts. Lesson 8 you learned how to find the trend by using 2 different techniques I have explained. So thoroughly you have to learn these concepts. And next time frames are very, very important. Lesson 11 I explained. Next lesson 12 I explained about the curve. Curve is very, very important for our bullish and bearish trade setup. The another name for the curve is location. That is what you learned. And next in lesson 13, price direction. It is a new concept I developed. It is very, very important in bullish trade setup. And lesson 13 and lesson 12 concepts combined, I defined some rules. Even a trend concept, all the 3 concepts together, I defined some rules. That is what decision making rules for identifying bullish and bearish trade setup. So once you complete lesson 14, you will understand the main usage of our software generated bullish and bearish trade setups. But still, for a trading point of view, decision point of view, you should complete income trades, because here I explained about different income trades. So DIT, daily income trade, hourly income trade, weekly income trade, monthly income trade, everything. The logic behind selecting the time frames in different time frames I explained. In this lesson you learned a DIT trade setup. We have to use 15 minutes is the entry time frame, lower time frame. And you should use 75 minutes per intermediate time frame for finding the trend. And you have learned HTF is daily. And also you learned the daily time frame and 75 minutes time frame also we should use for finding the price direction. All these things you learned in the earlier lessons. The rules and regulations behind DIT trade setup I explained in lesson 15. So you should complete all these things. Lesson 16, when a zone can be violated. Lesson 16, you also learned zone confluence, both the concepts. Both the training videos you have to complete, 16.1, 16.2. EMA confluence you learned in lesson 17. And lesson 18 you learned odd enhancers rules. All these things are essential. Lesson 19 you learned about risk management and position sizing, minimum risk acceptance, all the concepts you learned, even trailing stop, sometimes to protect your profits. And lesson 20 is very important. Checklist I have provided. Without the checklist you cannot proceed. All these things you should complete before you get into usage of our NeoStock software generated. Apart from that, most important things you should complete the advanced strategy lessons, that is having dependency on bullish and bearish trade setup. Lesson 21 onwards you learn advanced strategies, especially bullish and bearish trade setup. Which lessons you must complete? One is lesson 23. Here lesson 23. How to understand bullish and bearish trade setup you must complete. You should also complete lesson 24 also, zone confluence strategy. By combining lesson 23 and lesson 24 concepts, we defined advanced strategies for bullish and bearish trade setups for finding high probability bullish and bearish trade setup zones. The zones that might be having higher success rate compared to the other zones in bullish and bearish trade setup. Those concepts I explained by combining both these lesson 23 and 24 concepts. And those concepts I explained in lesson 27. Zone confluence with EMA confluence strategy. And these lessons you must complete to use bullish and bearish trade setups. Not only that, bullish and bearish trade setups, sometimes it may violate during the trend changes. This is a very important point everybody should remember. Bullish and bearish trade setups will be violated during the trend changes. When the volatility in the market is very high, there are higher chances bullish and bearish trade setups, especially at lower time frames, will be violated, like hourly income trades or daily income trades. Quite frequently they will be violated, our trade setups, when volatility in the market is very high. What is that? Lot of fear factor. Volatility indicates fear factor. A lot of fear is there in the market. Uncertainty is there in the market. Some days people will be thinking market will go up. Immediately after a few days, people might be thinking market will go down. When you have such kind of huge volatility changes, lot of fear factors are there in the market. At the time, your DIT trades will be violated quite frequently. That is, the danger is there. But to overcome that problem, I developed another strategy, my own strategy. That is TCO and TCZ zones. I explained in lesson 25. The high liquidity zones I explained. The trend change horizon and trend change zone. These two are low priority, high liquidity zones. When bullish or bearish trade setups are violated, immediately you should look for these TCO and TCZ opportunities. Even though your bullish trade setup violated, you may get a bearish trade opportunity with the help of this TCO and TCZ concept. Similarly, if a bearish trade setup is violated, immediately you may get an opportunity based on TCO and TCZ long opportunities. So that's why learn this lesson 25 also. You have around 2 or 3 videos, I think 4 videos are there in lesson 25. Several examples I have given in lesson 25. So learn those concepts. If our software generated bullish and bearish trade setups are violated, immediately you can look for TCO and TCZ zone opportunities. So that way also our software will helpful, because some people will use bullish and bearish trade setups for the zone violation. They wait until the bullish bearish trade setup violates. The moment it violates, immediately they look into TCO opportunities and they trade only TCO opportunities. That way also you have dependency on our software. That means the bullish and bearish trade setups I am generating with the help of the software will be useful in 2 ways. First way is those who wants to trade according to the trend. Whatever software zones are generating, those zones we take the trades. That is usage of one. Second usage is people don't use bullish and bearish trade setups. They wait until those zones are violated. They wait until the trend changes takes place from uptrend to sideways or downtrend to sideways. When bullish trade setups are violated, then immediately they go for trades as per the TCO and TCZ trade opportunities. So you have to, if you complete these lesson 25 videos, you will be in a position to use. Even when bullish and bearish trade setups are violated, you look for good profits. See how powerful our NeoStock softwares are. They are helping you. Finding bullish and bearish trade setup will take a lot of time manually. See, if you analyze 240 stocks, hardly you may get some 10 stocks or 8 stocks. To find, analyzing 200 stocks, you find 8 stocks. To find those 8 stocks, how much time you need to spend manually? But same thing, if you take the help of NeoStock software, it is giving you the results in fraction of seconds, or maybe 1 or 2 seconds maximum. So that means you are finding all the 8 stocks or 10 stocks in just a few seconds. And then you simply analyze the charts. How to analyze? That is what I am going to explain in this video. So now everybody look into the analysis, how NeoStock software generated reports I am going to use. So let me explain. First let us generate the reports. After that, We will draw them in the charts, and how I will make use of those charts I will explain. Okay. To generate the reports, which report I am generating in this video? Bullish and bearish trade setups for daily income trade. Daily income trade, what are the time frames we have to use? 3 time frames. One is 15 minutes entry time frame, that is LTF. And for trend point of view, you will be using ITF and HTF. ITF is primary trend, HTF is secondary trend. And ITF trend you will be using uptrend for bullish or downtrend for bearish. And HTF trend you will be using either up or sideways for bullish, or either down or sideways for bearish trade setup. After that, price direction, everything will take care by our software, especially this parameter, bullish and bearish trade setup parameter. Okay, first of all, what is our entry time frame for daily income trade? Entry time frame is 15 minutes. What does it mean by selecting? By selecting this, you are telling our software display 15 minutes demand and supply zones in my report. So whichever the time frame you select here, those time frame demand and supplies will be displayed on your report on the screen. Suppose if I select daily here, my screen displays daily reports. Suppose if I select 75 minutes, in the screen my software displays 75 minutes demand and supply zones. For DIT, what is the entry time frame? 15 minutes. That's why I am telling the software display the 15 minutes demand and supply zones on the screen. Okay. These 15 minutes zones can be displayed if you click on the generate the report here, top down strategy generation. It displays all 15 minute zones, but I don't want all 15 minute zones. What I want only those demand zones that are supporting bullish trade setup. First I am generating bullish trade setup. So that's why in the bullish and bearish trade setup, I am going to the entry time frame. What is the entry time frame? 15 minutes. And now I am telling the software. What I am telling? Generate a bullish trade setup for daily income trade. Because I selected the entry time frame as 15 minutes. Entry time frame 15 minutes means it is a daily income trade. So in daily income trade we have 2 types of reports, bullish and bearish. Which kind of report I want? Bullish. So I selected the bullish. Now if I click the top down strategy builder, it displays all the 15 minutes bullish and bearish trade setup zones. But we don't want all the reports. We want all the reports according to our checklist items. What is the checklist item you have land? In the checklist item you land, the base candle count should always be less than or equals to 6. By default, NeoStock software take care of this filter. So you need not set any additional filters. Okay, what is the second checklist item? The strength of the zone should be, leg out should be sluggish. This is the one manually after generating the reports, you should look into the zones and you have to take a decision whether to accept or not. Software I have not filtered this. There is a reason. The reason is even if the leg out is sluggish, our high liquidity zones works very well. That is the beauty of high liquidity zones. Many high liquidity zones having sluggish nature, still they gave good profits. So that's the reason why I don't want to filter with the help of the software. Wherever is required manually I want to. You already learned the concept sluggish. Zone strength concept you learned. Do you remember zone strength? In that lesson, the sluggish should not be used. We should reject. So let us take manually. After we draw the zones, manually, if any sluggish candles are there, we will eliminate those zones. But remember, all these points strictly you have to follow before you finalize your trades. But why we are discussing now? Because some of the zones we are filtering now itself while generating the reports. Okay, first one, our software is taking care. Second one, manually we will take care once the report is generated. And what is the third one? Is the entry zone achievement is a violated opposing zone. If it is not having violated opposing zone achievement, better reject the trade. Okay, that is the reason why in the software I want to select the filter. The first filter I am selecting is VOZ, violating opposing zone. If the zone is not having VOZ achievement, I want to eliminate. Okay. But to which zone we have to apply this filter? Because we have our software is generating two reports for every stock. One is a demand zone and another one is supply zone. In bullish trade setup, what is our entry time frame? Demand zone. Bullish means demand zone. Bearish means supply zone. So that's why you should tell the software this filter should be applied to demand zone. Which demand zone? You have so many demand zones, 15 minutes demand zones, 75 minutes demand zones, daily demand zones. Which demand zone? 15 minutes demand zone. Already we selected our entry time frame 15 and only zone should be selected, demand or supply. If you don't select this filter, you know what happens? This zone achievement is applied to either one. It consider demand zone is having zone achievement or supply zone, one of them is having zone achievement, it automatically filters that stock. But bullish trade setup, our entry zone is demand zone, not supply zone. So that's why this VOZ filter should be applied to the demand zone. So I selected 15 minutes demand zone. Now whatever the filters I select, any filters I select, all the filters will be applied only to 15 minutes demand zone. If these filters are applied to this demand zone and if they are passed, then only software displays those zones. Otherwise, software rejects those zones. That way it is saving our time. See, I am taking care while generating the reports itself according to the checklist. Few manually we will take care. Okay, what is the next checklist item? 4 item. Is the entry zone is having a fine-tuned 5-minute zone. Why? Fine-tuned 5-minute zone. If it is not having, what will happen? Lesson 16. We clearly learned, I developed a new concept. What is the new concept I developed? When a zone can be violated, we will be in a position to identify well in advance at least 80% scenarios, not 100%, 80% scenarios. What is that rule I identified? If a zone is not having a fine-tuned 5-minute zone, there are higher chances the zone will be violated. We have seen many zones not having fine-tuned 5-minute zones. They are all violated. When you know a zone is going to be violated, what is the reason in accepting the trade? So that is the reason why this is the filter we must check before you accept the trade. Not placing the trade, accept the trade. If you don't accept the trade, you remove the trade from your charts. And this one manually only you have to take. Why manually? Because sometimes while fine-tuning the zones, you may compromise the zones at 15 minutes level or 75 minutes level. Such kind of compromise our software does not do. Software is very, very strict. But a human is much better than software. Always remember, human thinking, judgment. I am talking about human decision making is always powerful compared to any other softwares. Why? Because human mission works according to the rules. But what about human? Sometimes we take the deviations based on our experience. And those deviations may work many times when you are a good experienced person. Software may not list the stock, but our human judgment may take based on our experience. Maybe we can at least accept, give a chance. That kind of decision you take. So that's why I don't want software eliminate based on this. So this is the reason why strictly we have to do this check only manually only. This is the reason why I never generate fine-tuning the zones based on the software. because sometimes it may ignore few very good trades, because there are some compromised, we can compromise and we can accept some, but that compromise may work many times. I already explained the concept of what is when we can compromise and draw the zones in one of the HLQ zone analysis videos. Those videos I kept in important strategies and analysis playlist. Important analysis and strategies playlist is there. So go through those videos. One of the videos you can identify when we can compromise and draw the zone. Okay, that is the reason why checklist item, our software is not taking care. Checklist number 4, you have to take care after you draw the zones. That I will explain how we will take care once we identify the zones with the help of the software. Next one, trade acceptance checklist. Is the entry zone having a minimum 1:3 risk reward? This is also manually we should take care. Why manually? Because human judgment is always best. See, software works according to the rule, but human, what we can do? You can adjust the entry. You can reduce the risk, adjust the entry till that level. If price reaches, you may get 1:3 RR. But if you programmatically, if you draw maybe type 1, type 2 proximal, you identify, till then you calculate the risk. You may not get 1:3 RR. It rejects the trade. But manually, if you adjust your entry below type 2 a little, few points below type 2 proximal, you may achieve 1:3 RR. Those kind of opportunities you will be missing if you are filtering with the help of the machine. So that's why only humans' involvement in this area only gives you best decision making. That is the reason why I don't want machine involved in this decision making. So fine tuning the zones and finding minimum 1:3 RR should be done manually. How we do this I will explain once we draw the zones. Okay, next checklist item 6 is the maximum accepted risk within 2% of the trade capital. Is it having maximum accepted risk within 2%? Should not cross 2%. This is also we will take manually, because once you fix the entry, till your stop buffer value, a minimum 2% risk should be there. So those calculations you should not depend on the machine. Those calculations you should take with the help of your own decision making. Okay, so these are the 3 checklist items. Manually we will take care, remaining software will take care. What is the next one? Thus your trade supports one of the conditions in decision making table. Decision making table I explained in lesson 14. That is essential for everybody should complete the training lesson. And whatever the rules I explained, everything will be taken care by our software. Where it will take care? Here, bullish or bearish trade setup. I selected 15 minutes, I selected bullish, right? The moment I select bullish, the decision making table for bullish trade setup will be applied by this filter. It will take care of all those rules. So that's why you save a lot of your time here. Whatever the rules you learn in the decision making, all the rules our software will take care. Okay, fine. So we need not worry about this checklist 7. What about the last checklist 8? Is the entry zone odd enhance score should be greater than or equals to 12 or not? If it is not greater than or equals to 12, reject the trade. To which zone we have to apply? Entry zone. What is our entry zone? 15 minutes demand zone. For this 15 minutes demand zone, see, look into the filter, minimum odd enhance score 12, I am applying. So by applying this filter, it will be applied on the 15 minutes demand zone. So total 3 filters are applied on 15 minutes demand zone. First filter, zone achievement, violated opposing zone. Second filter, minimum odd enhance score should be 12. Then where is the third filter? The third filter is this 15 minutes demand zone should not be a pierced demand zone. because bullish and bearish trade setups, we will not be using pierced zones. Pierced zones is a separate strategy that I explained in lesson 28. But bullish and bearish trade setup, we don't want pierced zones. That's why I want to tell my software what I have to tell. This 15 minutes demand zone should not be pierced. Where I have to tell? Scroll down. Below you have a parameter called pierced zone. Pierced count, not pierced zone. Pierced count. See here. Look into this parameter, pierced count. And where we have to apply this pierced count? The entry time frame zone you selected. What is that I selected? 15 minutes demand zone. So that's why in the 15 minutes time frame, we have to inform the software the minimum value should be 0, maximum value should be 0. What does it mean? It means pierced count should be 0. Why pierced count 0? Pierced count 0 indicates the zone is not pierced. If count is more than 0 means what? The count is more than 0 means either 1 or 2 or 3. That means if the value is 1, 1 time the zone is pierced. 2 means 2 times the zone is pierced. 0 means 0 times the zone is pierced. That means zone is not pierced. So that's why minimum value, maximum value I am setting 0. Okay, where this filter will be applied on the 15 minutes time frame? Demand, entry zone, demand zone. So for that this filter will be applied. So this is the way now you can filter the stocks. Now click on this top down strategy. How many stocks we got? 9 stocks. See the time frame, 15 minutes. Sometimes you may make mistakes. To check your mistakes, look into the search strategy. Look into the search strategy. What is the search strategy saying? Entry time frame is 15 minutes. That is what we selected, right? And the entry zone is demand zone. That is what we selected, right? And what is that it is saying? Zone achievement should be violated opposing zone, VOZ. And this VOZ should be applied to 15 minutes demand zone. What is the next filter? OE scores should be greater than or equals to 12. And this filter should be applied to this 15 minutes demand zone. And what is that we selected? Our bullish and bearish trade setup should be generated on 15 minutes entry time frame with bullish trade setup. That means our 15 minutes entry zone means it is a daily income trade. Entry time frame 15 minutes. And what is the next filter? Pierced zone on filter on the 15 minutes should be greater than 0, less than 0. And this filter should be applied to 15 minutes entry zone, demand zone. So by applying all these filters, we got 9 stocks. How many stocks we analyzed? 244 stocks we analyzed. Out of these 244, we have 17 indices are there, and remaining are our equity stocks, but listed in F&O listed stocks, but equity stocks only. But the filter we applied on F&O listed stocks. So 244 minus 17, they are all remaining whatever the count, those many F&O stocks are there as on today. So total 244 stocks we applied. See, we got a first one is indices. But this indices is not listed in F&O, so we will ignore this stock. This stock people can use if you want to buy ETF, exchange traded funds. If you are not aware of ETF concept, ignore it. In the upcoming future sessions, one of the sessions, I will explain. Timing, ignore it. If you are already aware of ETFs, you can take a private bank ETF and you can buy if it supports the bullish trade setup. Okay, F&O traders are remaining equity traders. We will be focusing on 2nd to 9th. Okay, what you will be focusing from here? This report structure, I hope everybody understand this report structure. If you don't understand this report structure, I recommend you complete our training lesson 21.1. That is part 1 of lesson 21. In that video, I have explained each and every column, their values and these abbreviations. Everything I explained in detail. So please go through that lesson. Okay. Now for drawing the zones, what is required? We need a leg in, how many base candles are there, and what is the leg out timestamps. These are the minimum things we required. And one more important thing is we need pattern also to identify the proximal line, because patterns will be changing. Proximal lines will be changing depending on the patterns. So that's why the pattern also our software identifies. These are the minimum essential things. Pierced zone anyway, you set the filter, none of the zones are pierced. Supply zone is only pierced, not demand zones. Have you noticed? Okay, why supply zone? Because supply zone is only target zone. We don't care about whether it is pierced or not. Our entry zone should not be pierced. That's why we set the filter on the 15 minutes demand zone. How many times zone is tested? You can look into this test and rejection columns. That will tell you. Some of these zones are high liquidity zones. That is also you can identify. This filter, the zone column will be helping you to identify. High liquidity zones, what is the main importance? They have higher success rate. How much success rate? We can't define. Only daily and 75 minutes HLQ zone strategy, that is intraday strategy. For that we define 80% success rate. But for these high liquidity zones, definitely we have a success rate more than 55%. Definitely. Okay. But they have, compared to the other zones, other demand zones, they are having higher success rate. But these demand zones are also having higher success rate if they support zone confluence and EMA confluence. Those strategies I explained in lesson 28. Not 28. Lesson 27. Lesson 27 I explained those strategies. That's why I told you, you should complete those lessons also before you look into those reports. We can further filter this list by applying those strategies. But now, initially I am not going to apply those strategies. Initially, let me draw all the zones in my charts. How easy to draw the zones, you will understand. Because you already learned in phase 1 training how to draw the zones. But only thing is, those zones are supporting bullish trade setup or not. That is the real challenging. Those zones are high liquidity zones or not. That is the real challenging in identifying them. And those challenges are addressed by our software. It is taken care of all those things. That's why it is displaying the zone as a high liquidity zone or not. The zone is supporting bullish trade setup or not. See here, 15 minutes entry time frame should be bullish trade setup. That means it is a daily income trade. So finding, see, by analyzing 244 stocks, how many bullish trade setups we identified? 9 stocks we identified. Can you imagine manually how much time you need to spend to identify these zones? That is the real challenge. The main advantage of the software is it will improve the efficiency of the trader. Okay, so first let me draw one by one. First let me start with RT Industries. Now we are at RT Industries 15 minutes time frame. When is the leg in RT Industries? 5th February, 13 hours. This is the one, 5th February, 13 hours. We have drop base rally. Is it drop base rally? Yes. Drop base rally, high liquidity zone. So let me draw the zone. Okay, let me add this into the checklist. See, this zone is already tested once. When? On Friday, 7th February. And reached this drop base, drop target it reached. That means this zone might have been already tested earlier, probably on Thursday's report, and already achieved the target. On the same day we got the trade, and reached the target, 15 minutes target. Next time, is it going to work? It's all depending on the fresh fine-tuned 5-minute zone. That is what you land in your checklist item 4. Is the entry zone is having a fresh fine-tuned 5-minute zone? If it is having a fresh fine-tuned 5-minute zone, probably it may give you another test. That we will see later when we analyze the charts in detail. First, I am going to draw the charts, all the charts. Next one is Ambuja Cement. This is also high liquidity zone, already tested 2 times. When it was created, 4th February 10:45. Here we have 4th February 10:45 rally, 2 base candles and a rally. So let me draw the zone. So this is already tested again when? On Friday. Friday it tested and moved up, probably somewhere here. It might have reached near to the target, very close to this. Or maybe rally based drop might have achieved, and this is violated, or and then further moved down. Okay, let me add this. Into the checklist. Okay. Next one is Axis Bank. When it was created, this is on 7th February 10:15. Yeah, 7th February 10:15, 2 base candles and a rally candle. Let's add this into our watch list. Okay, 3 stocks. Next one is Bharti Airtel. When it was created, 6th February 14:45. This is the one rally, 2 base candles and a rally. Okay, so let me add this into our checklist. Next one is Glenmark. When it was, this is also high liquidity zone. This is on 7th February 9:45, 2 base candles. So this is the drop, 2 base candles and rally. Actually, we can also consider rally, 3 base candles and rally. Maybe software is convinced to convince, so this is a drop candle, maybe. Okay. Drop base rally. Next one is a HDFC Bank. This is also high liquidity zone. This is on 4th February at 14 hours. 2 base candles. This is the one, drop base rally. And let me add into the checklist, watch list, HDFC Bank. Next one is M&M. Something is missing here. Axis, Bharti Airtel. After that, after Bharti Airtel, we have Glenmark is there. Why I went to HDFC Bank? Okay. Glenmark, when it is 7th February 9:45. Okay, this is already analyzed, but we didn't add into the checklist. Okay, fine. Landmark, we have 1, 2, 3, 4, 5 added so far, right? 1, 2, 3, 4, 5. RT Ambuja axis. RT Ambuja axis 6. 1, 2, 3, 4, 5, 6. Sorry. 2, 3, 4, 5, 6. Okay, next one is M&M. Mahindra and Mahindra. And when it was created, the zone 3rd February 9:15, one base candle. February 10 o'clock, this is 9:15, this is the one. We have a failed ERC as a drop base rally. So here drop base rally, because it is a drop, the lower wick of this candle we should consider. So this is the zone. And the next one is Navin Fluorine. Navin Fluorine is also high liquidity zone. This is on 4th February, 14 hours, one base candle. February, 13 hours, 14 hours. This is the one, drop base rally. Already tested twice. Six times it is tested. Okay, this is the one, first time, second time, third time, fourth time, fifth time, sixth time. Okay, fine, several times it is tested. Last time prices came very close to digital line, but if it creates any fine-tuned zone, again we get another trade opportunity. That we will see later. So total 8 stocks. First one is not listed in F&O, I just ignored. So remaining 8 stocks. So this is about bullish trade setup. But all these are all high priority zones or low priority. Maybe some could be having high probability trade setup support. Some might be having low priority trade setup. For that we need to further filter these stocks to find the real trades. But before that, let me generate even bearish trade setup also. Let me go back. Supply zone I am selecting. In bullish or bearish trade setup at 15 minutes I am selecting bearish. Remaining 3 filters what we set earlier, VOZ and the minimum odd enhancer score 12 and a piercer zone count we have 15 minutes, minimum 0, maximum 0, all 3 filters. But this time the filters are applied to 15 minute supply zone. Why? Because we changed the entry zone as supply zone, 15 minute supply zone. Now let's generate bearish trade setup, because we selected 15 minutes bearish. We got 6 stocks. It is also the same, but only thing is this time our entry zones are supply zones, not demand zones. So now let me draw these supply zones one by one. First Astral. This is a high liquidity zone, Astral. When it was created, 6th February at 11 o'clock. This is the 11 o'clock, 2 base candles and drop candle. Is it the same? Yes. This is a drop base drop. See, drop base drop. Let us draw the zone. So this is 15 minute supply zone. Now let us add these supply zones. So now the supply zones are bearish trade setup. Demand zones are bullish trade setup. And next one is Birla Soft. A supply zone When it was created, 24th January 1430, after that 3 base candles. Maybe it is not good enough to consider the leg out, maybe. Anyway, February 24th January 1430 here. 24th January 1430, 3 base candles and with hidden body a drop candle. So this one is selected. So this is our bearish trade setup supported zone. Okay, next one is IGL. 7th February at 12:30, 4 base candles. February at 11:15, is it? 12:30. This is the one rally, 1, 2, 3, 4. These are the medium size candles, part of the base. This is the base candle, these two also included as part of the base. And is it 13:45, 7th February? 13:45. Rally, base, rally, because it is rally till the high of the lagging candle we can consider. Okay. And it is already tested once. Okay, this is IGL. Next one is IRFC. IRFC, the supply zone, 7th February at 11 o'clock, 2 base candles. February 11 o'clock, 2 base candles, rally, base, drop, rally, base, drop. Okay, let me add into the watch list. Next one is NCC, Nagarjuna Construction. So this is a high liquidity supply zone. This is 6th February 1430, 3 base candles. February 1430, 3 base candles. See, this is a hidden body. Rally, 3 base candles and a drop candle. What is the high of this candle? 238, and this high 238. Okay. So this is NCC. Let me add LCC into watch list. And next one is State Bank of India, SBIN. This is a supply zone. When it was created, 5th February, 15 hours, 1 base candle. This is the one, drop, base, drop. 6th February 9:15 was the leg out, yes. And this is already tested 5 times. First, second, third, fourth, fifth, okay. So we have completed all, right? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Astral. 2, 3, 4, 5, 6 are there. Something is missed out. Astral, Bellasoft, IGL, After all, Bellasoft, IGL, IRFC, NCC. IRFC, NCC. Okay, State Bank of India also I should add. Sorry. Okay. 6, 1, 2, 3, 4, 5, 6. We added. Good. So these are the total bullish and bearish trade setups for daily income trade. Entry time frame 15 minutes. Demand zones or supply zones for bearish trade setup. So how to further identify high probability setup related zones from this? That is very important. That's why every day what I am doing while generating these reports, I am also generating based on zone confluence also and EMA confluence also. Let's verify. I am going back. First I am changing to, let me start with bullish trade setup. Your entry zone should be demand zone, right? Okay. We got earlier 9 stocks, including first one is indices. We ignored that. So from these 9, how we can further identify high probability zones? So that's why on these reports every day I am applying the concepts you learned in lesson 27. Lesson 27 I explained the strategies based on this zone confluence and EMA confluence. Zone confluence, we have 2 options. LTF and ITF demand zone confluence, or LTF, ITF and HTF demand zone confluence. These 2 filters I am listing, and those filters again I am applying EMA confluence. So let's focus on that. So first what I want to do, among these 9 I want to identify even more high probability trade setup supported zones. How to identify? First one is based on LTF and ITF demand zone confluence. What is LTF? 15 minutes. What is ITF? 75 minutes. What is zone confluence? The 15-minute zone should overlap with 75-minute zone. That means 15-minute zone should be part of the 75-minute zone. Okay, when 15 is part of the 75, what is the advantage we get? Because we believe lower time frame order flows and higher time order flows, when you compare, higher time frame order flows are much stronger because time frame is bigger. When time frames are more and more bigger, the order flows in the zone will be even much stronger. This is our general belief, and it is proven in many scenarios. So if 15-minute zone is overlapped with 75-minute zone, then the 15 minutes order flows are even much stronger because it is inside the 75-minute zone. So that is the reason why we are checking how many of these 9 15 minutes demand zones they are overlapped with 75 minutes demand zone. So in the zone confluence in our software, I am going back because we have already all these filters set. Apart from this, I am adding a new filter in the demand zone confluence. See, here we have a demand zone confluence. In this parameter, I am adding the filter 15 minutes demand zone with 75 minutes demand zone confluence. I am enabling yes. What is the meaning of yes? Yes means include this filter and apply this filter on our stocks. If this filter is supported, then only you list those stocks. Earlier, how many we got? 9. After applying this filter, let us see out of 9, how many will be filtered, and we get the final list. See, from 9 now it is come down to only 6 stocks. So we have RT Industries, Bharti Airtel, HDFC Bank, and M&M and Navin Fluorine. That means these 15 minutes demand zones are overlapped with 75 minutes demand zones. So what I am going to do now, I am going to add 75 minute zones into these stocks. First one is RT Industries. Let me go to the RT. Now I am changing the time frame to 75. See here, we have a 75 minute zone is available here. We have a rally. We have 1, 2, 3, 4 base candles and a rally candle. Let me add a 75 minute zone here. So this is the 75 minutes demand zone. Inside 75 we have 15 minutes demand zone. Such kind of order flows are stronger. See, the moment prices entered, they were started moving up. That way this zone is a high probability trade setup. So this is even more, compared to the remaining, this is even more high probability. That's why it got a success rate. It tested and then moved up. Okay, fine. What else we have? Next, Bharti Airtel. Let me open that Bharti Airtel. This drop base rally also should be there inside. This is a 75 minutes chart. See now, here also we have drop base rally. Let me draw the zone. See, this is 75 minute zone. Inside 75 we have 15 minute zone. Excellent. And what is the, we are in the 75 minutes chart. See here, time frame 75. What is the next one? HDFC Bank. Go to HDFC Bank. This is also, you see, you have a rally, 2 base candles with a hidden body. You add, it is going to be a big candle, rally candle with hidden body. See, this is a 75 minute zone. Inside 75 we have this 15 minute zone. Okay. And 75 is also high liquidity zone. It is getting tested several times. Maybe high liquidity. We can't say it's so far, but there are higher chances it could be. Yeah, it could be highly, because you see here we have drop, base, rally. Again, LOTL zone. Okay, anyway, this is 75 minutes, HDFC Bank. Next one, what is that? M&M, Mahindra and Mahindra. Where is M&M? See here we have a rally candle, you have a 2 base candles, again a rally candle and a leg out of this. Here it is overlapped. Now you draw the zone. See, we have a rally, 2 base candle, rally. It is a 75 minute zone. Inside 75 you have 15 minute zone. That's why this order flow could be very strong. Okay, M&M. What is the next one? Navin Fluorine. Go to Navin Fluorine. Navin Fluorine also, you see here you have a rally candle. You have 2 base candles and a rally candle. That way, or maybe this also could be base. You have a rally, 1, 2, 3 base candles and a rally candle. You draw the zone. See how nicely our software is identifying these zones. This is the 75 minute zone. Inside 75 you have a 15 minute zone. Perfect, right? So this is the power of our software. How our software perfectly identified all these zones. And all these zones are inside the 15 minute zones. So what I do, I will adjust all these overlapped zones to first in our playlist. First RT Industries. Next one is Bharti Airtel. This is Bharti Airtel. And then HDFC Bank. I am keeping these zones in the upper side of my watch list so that I know these zones are having high priority. HDFC Bank. Okay, HDFC Bank. Next one is M&M and Navin Fluorine. Where is M&M and Navin Fluorine? See, we have 5 stocks. Look into the first 5. 1, 2, 3, 4, 5. These 5 stocks are having LTF and ITF demand zone confluence. These 5 stocks. But is it good enough? Maybe this is not really good enough. In case if we have even another high probability supported stocks, even much more probability, how do we identify? Within among these 6, how many we further more high probability? One chance is these 75-minute zones might be having a daily EMA confluence. If these 75-minute zones are having daily EMA, there could be even more high probability supported stocks. That means 15-minute zone is inside 75. If the 75-minute zone is having daily EMA confluence, there are more higher success to, they have more probability to get the higher success rate. So that's why what I am doing, again I am going back to the previous screen. In this screen, in the EMA confluence, whatever the filters we set previously, they are all there in the screen. So that's why directly I am setting the new filter in the EMA confluence at 75 minutes time frame. I am setting the filter 75 minutes demand zone is having daily EMA confluence or not. That filter I set here. Why I set? Because all the 75-minute zones earlier are having uptrend because they were bullish trade setup. ITF is always uptrend in the bullish trade setup. Because they have uptrend, EMA confluence works with only in the trending. Your trend is uptrend bullish trade setup. So EM demand zones we are looking for EMA confluence is there or not. Which EMA? Daily EMA confluence. Because the last EMA we should use daily. Weekly, monthly, daily. Below 75 EMA we don't see. Because they are very high sensitive. So daily is the most proven one. So we have 2 stocks. M&M, Bharti Airtel and M&M. So let me move both into the top list. Bharti Airtel and M&M. See, we have both these stocks. But how do we know they are having EMA? Go to the daily time frame. In the daily time frame, you are seeing EMA. But is it having EMA? Yes, EMA, because maybe the software might have been 15-minute zone could have been drawn like this, according to our software. Drop 2 base candles. This medium also might have considered as part of that. Now go to the daily time frame. See, now EMA is there. Probably this is how our software identified the 15-minute zone. 75-minute zone. Drop 2 base candles. This medium size is also part of the base. So total 4 base candles and rally. Maybe. We thought this is a drop candle. Software might have identified. This is one reason, or another reason, it could be like this. Sometimes, let me go to the 15 minutes, daily time frame. Sometimes a little below or little above also it will consider our software. But according to my feeling, this gap is a little bigger. So generally a small buffer. Above and below also our software will consider. Within that buffer, if this is there, it will consider. So that's why what I do in the Bharti Airtel, how our software identified the 75-minute zone, let me identify. So I'm selecting 75 minutes time frame. In the 75 minutes time frame, I'm generating all the stocks, supply demand zones, Bharti Airtel, 75 minutes demand zone, 1 to 11:45, 2 base candles. 1 to Okay. Wow, 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 wow. See the beauty of our software. See here. This is a failed ERC as a again. You have a 2 base candles and then you have a 2 rally candles. See how our software identified? Our software identifies the nearest to the current price. What is the nearest to the current price? This drop base rally is a LOTL zone. Inside this drop base rally, this is the main zone. That's why our software recognized this drop base rally. This is only LOTL zone. You got it? So let me delete this LOTL zone. This is the 15-minute zone. This 15-minute zone is inside this drop base rally, but here drop base rally LOTL is also created. Anyway, LOTL is part of our main source. What is the main source? This is the one. And this is a failed ERC candle. Maybe it could be a rally candle, failed ERC. This is the drop candle. This is the way we have to draw the zone. See here, Bharti Airtel, the failed ERC is a rally. See, it identified as a rally-based rally. See, this is a rally, failed ERC as a rally because dynamic view. Software always uses dynamic view. Dynamic view point of view, it is a rally, rally, rally. And finally, this is whole thing is like. Okay. Excellent. See the difference between our way of, human way of understanding. See, as a human, what we did, we ignored. We just looked into drop base rally. But mission, it considered the main source. This drop 2 base candles rally, this is the main zone. This is only LOTL zone. This drop base rally is only LOTL. Now look into the daily time frame. See, now daily zone is having a EMA confluence. In the daily, we have this 75-minute zone. This is the beauty of our software. Perfect. So that's why this is even more high probability trade setup supported zone. Okay, fine. This is about Bharti Airtel. Next, what about M&M? This is M&M. We have rally, 2 base candles and a rally. This is the 75-minute zone. Inside we have 15. And this 75 should, this area should have a 50 daily EMA confluence. So let me go to the daily time frame. See, the zone is having daily EMA confluence. Just about to touch this zone, a small gap. I told you, our software uses small buffers below and above. Within that buffer, if it enters, it will consider as zone confluence. So perfectly it is there. So that's why our software said these two are even more high probability trade setup supported stocks, because they have these 75-minute zones are having daily EMA confluence. Apart from zone confluence, demand zone confluence with 15 and 75 minutes time frame. Okay, this is LTF and ITF. And what else additional reports I am generating? I am also generating LTF, ITF and HTF. What is LTF? 15 minutes. ITF? 75 minutes. HTF? Daily. Now we should also look into daily demand zones also. First, let us identify how many zones our software identified. So let me go to the previous report. Whatever we set, everything is available. Now EMA confluence, what we set, this is not valid anymore. Why? Because this is ITF specific. Now we are looking for HTF specific. HTF specific, you should use HTF EMA confluence, not ITF. So that's why I am removing this EMA filter. Later on we will set daily EMA filter, but before that we will generate LTF, ITF and HTF demand zone confluence. That is 15 minutes, 75 minutes and daily demand zone confluence. So for that we need to go to the demand zone confluence. Go to the demand zone confluence. Here how many filters we have to set? 3 filters we have to set. What are the 3 filters? One is 15 LTF and ITF. 15 minutes and 75 minutes demand zone confluence. Previous report we already set, so that filter is already enabled. Okay, what is the second filter? LTF and HTF, that is 15 minutes demand zone and daily demand zone confluence. Okay, what is the third filter? ITF and HTF, that is 75 minutes demand zone and daily demand zone confluence. If you set all the 3 filters, what will happen? Now 15 minute zone is overlapped with 75 minute zone. Both together again they are overlapped with daily zone. That means all these 15 minute, 75 minute zones are inside the daily zone. So such kind of combination, how many stocks are available? Let us filter. We got 3 stocks. Bharti Airtel, HDFC and M&M. See here, Bharti Airtel, M&M and HDFC is also there. Let me move HDFC further up. Now these 3 should have a daily EMA confluence. Let's verify with the daily time frame they have EMA confluence or not. See here, this is also having daily zone confluence. See, this 75 minute zone is almost same as daily, small extra margin is added. Let me add this zone as a okay. See, we have a daily zone. This is a rally candle, base candle, rally candle. So zone confluence is there. Fine. And also having daily EMA confluence already it is there. So obviously it supports daily also. So that's why it is even more powerful. That means when you filter with EMA confluence, this stock should filter. Which one? Bharti Airtel. Because daily zone also having confluence. Okay, fine. Next, what is the next one? M&M. M&M is also having daily EMA confluence. Where is the daily zone? Probably this is the one, rally, one base candle. Maybe this is considered medium or leg out our software. Let us check M&M how exactly these daily zones are there for M&M. What our software is suggesting. So I am selecting daily time frame. Okay. In the daily time frame, M&M, all these are all daily zones. See the M&M 155 item, M&M. It is having a daily demand zone 31 2025, one base candle 1 to 2025, 30 January 2025. This is the leg-in, this is the base, this is the rally. So let us draw the daily zone. See, this is the daily zone. See, this daily zone at the proximal line, 75 minute zone together with 15 minute zones are overlapped. And that is having EMA confluence. So at the proximal line, they have 15 and these zones are overlapped. Okay. So that's why this is a high probability setup. Next, HDFC Bank. HDFC Bank, we have a, let me delete this old one. See, we have a rally candle. We have one, see, hidden body, at the hidden body also here. You get a big candle, rally candle, you have 1, 2, 3, 4 base candles and again a rally candle, maybe. Let us check whether our understanding is same as what software has given. This is HDFC. So in the HDFC Bank, see this is HDFC Bank 105 serial number. demand zone. See 28.1. After that 5 base candles. See, this is a 28.1. You have 1, 2, 3, 4, 5 base candles. So exactly the same way how we assessed. Now you draw the zone. See, this is the daily zone. This daily zone at proximal line overlapped with 75-minute zone. That proximal line again overlapped with the 15-minute zone. And daily zone is having EMA, and this EMA is moving close to this area. But you know what is the problem? If this zone is violated, here if there is another near this, another, there are higher chances that 15-minute zone may work. Let's go to the 15 minutes time frame. But here also there is any 15-minute zone. Yes. See here you can draw a 15-minute zone like this. Of course there is one more 15-minute zone here, but this is a 15-minute zone. 20. You can also draw one more 15-minute zone like this. You have multiple zones. Now go to the daily time frame. Sorry, these are the 15, but we have to look into 75. Okay, here rally, base, rally. Okay. So rally, base, rally, this is 75 inside the 15 minutes. Now within this area you have two 15-minute zones are there overlapped. First let us focus on the 75. Let's go to the daily time frame. And this zone is already crossed this, approaching this. In case this zone is violated, HDFC Bank gets supports from this 75. But trend will be changed. Which trend? 75 minutes trend. But a daily trend, maybe this stock still might be working for DIT trade setup, weekly income trade, or MIT, monthly income trade. And either trade setups, this zone may work, this daily zone, if first one is violated. When first one will be violated, if the volatility in the market is high, due to the heavy volatility changes, the 75 minutes trend may be changed to the sideways. At the time, this will work, the one below. Otherwise, a bullish trade setup, it will pick up the orders and again it will move up. So that's why we have to assess all these levels when you are analyzing the stock. Why analyze one more zone here? The reason why this 15 minutes zone confluence is missing. Near to this, is there any another 75 minute zone is there? See how I am thinking. Exactly the same way you should also think. Then you should prepare in case if this zone is violated. Probably in this area we may get trade opportunity. Provide the daily trend is uptrend, and daily trend should support bullish trade setup. At the time you can plan for weekly income trade instead of daily income trade. You are shifting to weekly income trade. See how we are changing our decisions. Initially you are planning for daily income trade. If the daily income trade is violated, immediately you will change it to weekly income trade, because this daily zone is having daily EMA confluence. And also at this EMA level, a little below, we have another 75 minute zone. And this 75 will be your entry zone. Because in weekly income trade, 75 minutes is entry. Earlier 15 minutes was entry. Because 15 minutes are violated, you go for 75 minutes entry. Such kind of decision making you have to take. Maybe prices may go up to here and then started moving up. If 15 minutes bearish trade setup is violated, because 75 minute zone violates, 75 minutes trend changes to down sideways trend. But daily trend is still, it could be uptrend if this daily zone is not violated. But before that, you need to assess what is the daily trend. Is it a sideways trend, or is it a downtrend, or is it a uptrend? That kind of assessment you have to do. At present, I am not focusing on those analysis. You please do it. Suppose if daily trend is not uptrend, if it is sideways, then you can't use a weekly income trade bullish trade setup. You can't use. At the time, you have to look for trend change origin concepts, TCO. That is what you learned in lesson 25. Okay, this is HDFC Bank. See, we got 3 stocks. Currently, they are having EMA confluence. Which zone is having 75-minute zones are having EMA confluence? Okay, why HDFC Bank displayed? Because this is somewhat close to the zone. EMA is somewhat close to this zone. The buffer I added, probably the buffer is using up to here. See, it looks like the 75-minute zone is not, this EMA is not reached. But as I told you, I am adding some buffer below the zone and above the zone till the buffer level it reached. So software is considering this zone is having EMA confluence. 75-minute zone with daily. Oh, sorry. This is not EMA confluence. Earlier, HDFC is not listed for 75 EMA. HDFC is listed for LTF, ITF, HTF zone confluence. Sorry for my mistake. This was not listed. That means this gap is not enough. Okay. These 3 are listed because of this LTF, ITF, HTF zone confluence. Okay, out of this LTF, ITF, HTF, how many are listed? 3. Out of these 3, all are having uptrend, right? HTF trend. If HTF trend is uptrend, you can also look, this HTF zone is having HTF EMA confluence or not. What is HTF? Daily. If daily zone is having daily EMA, these 3 stocks are even more high probability trade setup supported zones. So go to the EMA confluence, go to the daily time frame. Now I am enabling the filter daily demand zone having daily EMA confluence. Now all the 3 will be listed? Yes, because we verified all 3 are having daily zones are having daily EMA. See here, daily zone is having daily EMA confluence, HDFC. Look into the M&M. M&M daily zone is having daily EMA confluence. Look into the Bharti Airtel. Bharti Airtel daily zone is also having daily EMA. So obviously our software has to list all the 3. If it does not list, some problem with our software. That way you have to understand. Okay, now let us check whether software will list all the 3 stocks or not. Yes, software listed all the 3 stocks. What it is said now? All the 3 daily demand zones having uptrend, they are also having daily EMA confluence. See? Daily demand zone having daily EMA confluence. That is what EMA confluence said. So this is the way we are assuming these 3 are even more high probability trade setup supported stocks. It doesn't mean they are remaining all are not high probability trade setup. They will also work because some of those stocks are also high liquidity zones. That way they may work. So that's why we have to keep our focus on all these stocks. But we give more focus to these 3 stocks. Suppose we got 2 trades. One is from this list, another one is from the below list. We give first priority to this list. Assume prices did not reach these 3 stocks. It reached the below one. Obviously, we have to give priority to that stock, even though the probability is less. Because opportunity it is giving, we have to take a risk. Suppose if the prices are going up, you will be missing a trade, right? So that's why everything I added in the watch list. After that, based on the priority, what I did, I sorted all these stocks based on the high priority. Now if you look into all the charts, you will see. But is it good enough? No. Why? Now you have to do further analysis based on our checklist items. What is that? You need to check whether 3 checklists we need to verify. What are the 3? zone strength is sluggish or not, you have to verify. If it is sluggish, leave that stock. And what is the another checklist we need to identify? Is it having fine-tuned 5-minute zone or not? If it is not having, you have to leave that stock. What is the another checklist? Is it having 2% minimum risk? The zone is there. If the risk is more, either you have to position size or you have to leave the stock. So all these things. And one more, 1:3 RR. This is also. See, 2% minimum, 1:3 RR is there or not? Fine-tuned 5-minute zone is there or not? And zone strength sluggish or not? So total 4 checklist items you need to verify. How do we verify? I may not be showing you all the stocks, reminding you how to do. Let us analyze one stock out of these 3. So let me analyze this M&M. M&M, we have a fine-tuned zone at the proximal line of the daily zone. So first, what is our entry time frame? 15 minutes. So go to the 15 minutes time frame. Is it a fresh zone? So far it is fresh, but is it having a fine-tuned 5 minutes that is a fresh zone? Let's go to the 5 minutes time frame. Is there any 5-minute zone here? Check here. Yes, we have a 5-minute zone. We have a big candle, rally candle. You have 1, 2, 3, 4 base candles. Then a rally candle. You can draw the zone with the type 2 proximal. Demand zone. This is the supply zone I draw. Okay. Demand zone. Rally, base, rally. We have a fine-tuned 5-minute zone. But where do you take entry? You may take entry within this fine-tuned 5-minute zone. You may take entry at the 15 minutes type 1 proximal, or you may take an entry at 15 minutes type 2 proximal. Where is 15 minutes type 2 proximal? This is the one, exactly same as 5-minute zone. 15 minutes type 2 is same as 5-minute zone. It's all depending on our risk management. You plan your trade. Okay, then what is our target zone? Your target zone should be your supply zone. Is there any supply zone here? So far, at present, everybody please concentrate here. We have a supply zone here. We have a rally, 2 base candles and a drop candle. This is the currently active supply zone. Let me draw a supply zone here. This is the 15-minute supply zone. This is the 15-minute supply zone. So this is our trade. And here is our target. But before that, is it a sluggish? No, it is not sluggish. Follow-through candles are there. See here, you have a rally candle. You have a follow-through candle. So the zone is not sluggish. It is eligible, the 15-minute zone. What about fine-tuned 5-minute zone? Is it a good zone? That way also you can verify if you want. Yes, that is also good. See here, you have a rally candle. You have another rally candle. And here rally base rally is there. So before prices reach here, this zone has to be violated. Definitely it will consume some supply. The moment it consumes some supply, existing supply will be weakened. By the time prices reaches to our zone, definitely they have higher success to get, higher probability to get success. This is the way you have to analyze the prices. You need to read the prices. And how you need to get confidence about your zone. Because there is a rally based rally, it is not a fine-tuned zone, still it will consume some of the existing supply. By the time it reaches, the demand in this zone is very strong because it is overlapped with the 75-minute zone, is also overlapped with the daily zone. So definitely the order flow in this area will be very strong. There are higher chances it will push up to this 15 minutes target zone. If not up to 15 minutes, till 1:3 RR I can exit. Okay, minimum 1:3 RR is there or not? That also. We have a tool. What is the tool we have? We have a long position. From this tool, this is a buffer I am adding, some approximately I am adding, time being, stop buffer. But you calculate by looking into the daily ATR, 15 minutes, stop buffer value, you calculate and feed them. Let me increase some more also. Let us assume this is our stop buffer. Okay, till this, do we have 1:3 RR? We have 1:5.9. That means we have 1:5 RR is there. So it is excellent. So RR point of view, we don't have any issues. Risk point of view, you calculate this risk. Mostly this risk will be within your 2% risk level. In case if the risk is beyond 2%, what you do? You adjust your entry. You go a little below until you get 2% risk level. That way you plan your trade. Or if you are having fear of missing the trade, sometimes what happens, price just touch and it will move. If you have fear of missing, what you do, keep your entry exactly here, type 2 proximal in case you are planning a type 2 proximal of 15-minute zone. Exactly the type 2 proximal is also 5 minutes fine-tuned zone. But risk is beyond 2%. In case, if the risk is beyond 2%, do position sizing. Based on the position sizing, you can plan the trade. But the risk with the problem with the position sizing is you can't plan your trades in F&O. Because risk management is not easy with position sizing in F&O unless you are a high value trader. High value trader means you invest huge money. You buy like 20 futures or 30 futures. At the time you can do position sizing within futures. But you are a trader having less capital, you buy only 1 or 2 or 3 or 4 or 5 futures. At the time risk management may not be easy. So at the time you have to plan your trades in the cash segment. See, you may get some profit. Profit is a profit, right? Whether you get bigger profit or smaller profit, it doesn't make any difference. Profit is a profit. When opportunities are there, we have to utilize those opportunities. Suppose risk is within the same %, no issues at all directly, you can take a future here. See how we are planning. The sluggish is good, passed out, RR is passed out, and the fine-tuned 5-minute zone is there. It is a confirmation that a fresh fine-tuned 5-minute zone. Confirmation that there is an institutional order flow is there. And assume the 2% risk management only, this risk is there. How do you calculate? Very simple. You go to entry price, what is your entry and what is your stop loss, deduct the value, entry minus stop loss. Minus, what is your stop level? This is with the stop buffer. I added some stop buffer. Approximately I am saying. These are rough calculations. So you have 25 rupees, 25.6. This is the money you might be losing, let us assume. And what is M&M F&O? Go to F&O. Let me open the margin calculator. So in M&M, so let me open February futures. February expiry, we have 175, 109. This is your, say for example, into 175. How much you will be losing? 4,080 rupees. What is the current price here? Here. So by the time prices reach here, prices will be falling, your margin cost also might be slightly reduced. So 1,09,000, let us assume 1,08,000, some 700 rupees. If prices reaches our zone, let us assume. Roughly we are calculating, rough value. I mean, not accurate, but approximate value. Into 100, 4 lakh into 100 divided by your margin cost. Let us assume it is 1,08,700, let us assume. See, you got 4.1% risk, so you can't take in futures if this much risk is there. So you can't take this risk. So what is the choice for you? You have only two choices in the cash segment. You have to do position sizing and you have to plan your trade, or the another option is take a deep entry. See, maybe I might have added more risk here. Because of the more risk, your risk might have been doubled. That's why I am saying these are the approximate calculations. See, reduce your entry. Let us assume this, with this entry only I want to take. So with this entry, how much, what is your risk? Let us calculate. Now entry is changed to 3054. You are taking deep inside trade, you are taking. Minus, what is your stop loss? It still remains same. Let us assume. Now it is 16.45 into 175 lot size. 2878 into 100 divided by 1,08,000, right? Yeah, 1,08,700. 1,08,700. Still it is 2.64. Still it is beyond 2%. So you can't take a trade. So you have, what is the other option you have? Further reduce the risk. Some more. You can't go very close to the digital line. If you go very close, what happens? This will be violated. Maybe this time it may work. In case if prices reach that level only, you get a trade. Otherwise you may miss the trade. $3052.80 minus, you got 14 into 35 into 175. 175, right? Yeah, 175. Into 1,08,700. Sorry, into 100 divided by 1,08,700. This is assume this is your margin cost of one futures lot. Now 2.3. Still you can't take. Still you need to reduce your entry. Why we are getting such a huge? Maybe I added a bigger stop buffer. If you might have reduced some more stop buffer, maybe assume this is the actual, because roughly I added. That's why you are not getting the trade. So this is how you should plan where exactly you need to take. So let's assume somewhere here, maybe let me add the entry a little more, because I reduced the stop buffer, assuming it will not exceed. Now 3055.90 minus 3124.20. Entry price 3055.90 minus stop buffer 304 to 75, the stop loss, into 175 into 100 divided by 1,08,700. You got 2.1, close to 2%. You reduce some more, you will be getting up to 2% risk. Maybe some more small few points more. But do prices really reach there? Maybe sometimes prices may not reach, they may move up. Sometimes may reach, then you are lucky, you will get a trade. Or if you have fear of losing the trade, you don't adjust your entry, put your entry at the type 2 proximal of 15-minute zone, do position sizing, take entry at the cash segment instead of in futures. That way you get some profit. So this is how you should plan before you are planning, finding your exact entry. There is another possibility might be there. What is the another possibility? Now look into the 15-minute zone. This is our target zone, right? But have you noticed? We have a rally to base. Excuse me. You have a rally to base candles. Tomorrow, if you drop candle and then prices reached here, see, your target will be changed to a new one. So at the time you have to draw a target to the new target. Something like this. Now from here to here you need to calculate my RR is there or not. Suppose maybe your zone might be somewhere in the middle. While prices are coming, again a drop candle, here two base candles and drop candle. See, now your target will be changed somewhere here. Somewhere here a new zone will come. Now you need to check till this point, minimum 1:3 RR is there or not. If RR is not there, you can't take the trade. See, this is today when we are analyzing, this is the position. Tomorrow before you are taking the trade, the market dynamics will change or new zones might be created. So that's why you should not think this is the final analysis. This is the analysis we kept before the trade plan. Sometimes this analysis still remains same. Price sharply will come down and from here again started moving up. Sometimes prices will be coming here a drop and some base candles and again a drop and we get the trade. At the time before taking, you should check minimum 1:3 RR is there or not. Hope you got the clarity. So this is the minimum analysis you have to do. Exactly the same way you have to do, analyze the remaining chart supply zones also. See, if you look into our report, the supply zones, let me go back. Let me remove this EMA filter and also let me remove this the demand zone filters also. Okay. Now what I am going to do, I am going to set 15-minute supply zone and here it should be in bullish or bearish trade setup at 15 minutes bearish. So earlier we got these 6 stocks, right? Look into our list. We have these 6 stocks, 1, 2, 3, 4, 5, 6, Astral, Birlasoft, IGL, Astral, Birlasoft, IGL, IRFC, NCC, State Bank of India. See, all 6 stocks. Exactly the same way how we generated, I was looking for even more high probability trade setup supported stocks. I mean, every day I am generating. So what I am doing every day for this list, further again I am adding this LTF, ITF zone confluence and LTF, ITF and HTF zone confluence and also EMA confluences. First what I do, LTF and ITF out of the 6 stocks, how many are having 15 minutes and 75 minutes supply zone confluence. Now supply zone. You have to look into the supply zone confluence filter. So I am enabling the filter 15 minute supply zone and 75 minute supply zone. This filter I am applying on the 6 stocks. We have 6 stocks filtered. All 6 stocks are filtered. That means in all these 6 stocks, these 75 minute supply zones are overlapped with 15 minute supply zones. These are the 15 minute supply zones. These 15 minute supply zones are overlapped with 75 minute supply zones. So now let me go to the 75 minutes time frame and let me open one by one. First one is Astral. Is there any 75 minute zone? Yes, see here. You have a drop base, a drop. Let me draw the 75 minute zone. So this is the 75 minute supply zone. Inside 75 we have 15 minute supply zone is overlapped. Similarly, let me go to the next stock, Birlasoft. See, Birlasoft also you see, you have a drop, base, drop. Let me draw the 75 minute supply zone. See, inside the 75 minutes we have 15 minute supply zone. Now go to the IGL. IGL is also the same. We have a rally, base, drop. So let me draw the zone here. Because it is a rally candle, from here we should draw the zone. The higher we curve the leg in also we should include. So drop, base, drop. So this is the 75 minute zone. Okay, now let's go to the IRF. And IRF is also, see here, you have a drop candle, 2 base candles and again a drop candle. So let us draw the zone. So this is the 75-minute zone. Drop, base, drop. Inside 75 we have 15-minute zone. Now go to the NCC. NCC is also same case. We have a drop, we have base candle, medium size leg is also part of the base, and drop candle, and this will be your zone. So inside the 75 we have 15-minute zone. And last one is State Bank of India. This is also we have a drop candle, 1, 2, 3, 4 base candles and drop candle. So inside this 75-minute zone we have this 15-minute zone is there, and 15-minute zone is already tested, and see how it pushed the market down. After it gave a huge profit, SBI. Go to the 15 minutes time frame. See, it is tested. When happened? On Thursday. Thursday this zone already gave a very good profit. It was given so much profit it would have given you. Thursday you got till Friday evening, the last Friday. So that means this zone might have been already listed earlier. When it was listed, probably on Wednesday, it might have listed. No, I think before live market itself it is created, before listing itself. Anyway, so these 6 stocks are having a zone confluence. That means 15-minute zone is inside the 75-minute zone. Now what is the next step? Now we need to find how many of these 75 minutes supply zones are having daily EMA confluence to find even more high probability trade setup supported supply zones. So now let's go back to the report. Let us add EMA filter. This is the LTF and ITF supply zone confluence. For this filter, 6 stocks, we need to add ITF supply zone confluence. So in the EMA confluence, what is ITF? 75 minutes. So in the 75 minutes supply zone, we should look for daily EMA confluence. 75 minute supply zone is having daily EMA confluence or not. We need to verify. So let's verify. Out of these 6, we got 3 stocks. So these 3 are even more high probability trade setup supported zones. Astral, NCC and State Bank of India. Let's go to the report. First one is Astral, next one is NCC. I am ordering according to this high priority. NCC and State Bank of India. These 3. So these 3 are having, supply zones are having daily EMA confluence. Let's verify whether really they are having daily EMA confluence or not. First one is Astral. So I am going to the daily time frame. See, this is the 15-minute zone. This 15-minute zone, supply zone, is overlapped with 75-minute supply zone. Now let's go to the 75. They are overlapped. Is this 75-minute supply zone is having daily EMA confluence? Let's go to the daily time frame. So in the daily time frame, and look into the supply zone. This supply zone is having daily EMA confluence, because as I told you earlier, software uses a small buffer before the zone. So within the buffer level, if prices are EMA enters, we consider it as a EMA confluence. Why we add buffers? Because prices won't exactly touch EMA and they don't move. They may go a little above EMA and then come down. If it is a demand zone, the prices reach the EMA or a little below and then again they go up. Because of volatility levels in the market on that particular day, we see those differences. So that's the reason why always we need to we need to add some buffer before and after the zones. And if EMA is entered into that level, we should consider. So that is the way this zone is having EMA confluence, Astral. And what about NCC? Same is the case with NCC also. See here we have a 75-minute zone. Price has almost reached the 75-minute zone. So this is also having EMA confluence, NCC. And what about State Bank of India? State Bank, exactly the price is there inside the 75-minute zone. So this is also having EMA confluence. So that way these three are having a more high probability to get the success. It doesn't mean they get success or they fail. It's not that. Compare it to the other stocks. Success or failure again depends on the trend changes, as I told you already in the beginning of this video. And trend changes happens when volatility in the market is moving very high, especially in short-term income trade related stocks. Okay, this is about LTF, ITF and LTF, ITF and ITF EMA confluence. But is that enough? We can also use another one more filter based on LTF, ITF and even HTF. That is 15-minute supply zone, 75-minute supply zone and daily supply zone confluence. So for that, let's go back to our strategy builder. In the strategy builder, we have already previously set values are there. In that EMA confluence, we have 75 minutes ITF filter. Already we said we have to remove it because now we are looking for HTF specific. Earlier what we set was ITF specific. So that's why I removed the EMA filter. And in the supply zone confluence, we should set three filters: LTF, ITF and HTF supply zone confluence. First filter is LTF and ITF supply zone confluence. That filter is already enabled in the previously set report. This is LTF, ITF supply zone confluence. Next one is LTF and HTF supply zone confluence. That is 15 minutes and daily supply zone confluence. So I enabled the filter. And third filter is ITF and HTF supply zone confluence. That is 75 minutes and daily supply zone confluence. With all the three filters, now LTF, ITF, HTF supply zone confluence is enabled. That means 15-minute supply zone should be overlapped with 75-minute supply zone. Both together again overlapped with daily supply zone. How many such kind of stocks are available? Let us verify. And we got 6 stocks: Birlasoft, IGL and NCC. That means in these 3 stocks, these 15-minute supply zones are overlapped with 75-minute supply zone. Both together again overlapped with daily supply zone. So Birlasoft, IGL and what is the another one? NCC. NCC is already there here. So let us look into these two and NCC also. First let's start with NCC. Let me go to the daily. We are already in the daily time frame. See here in the daily we have a rally, we have 2 base candles and then we have a drop candle. Let us draw the daily supply zone. See, we have a daily supply zone. Inside daily we have 75-minute supply zone. Inside 75 we have 15 minutes our entry time frame supply zone. And moreover, the daily zone is having daily EMA confluence. That anyway, that filter we will set next. We will set at the time this stock has to be filtered, NCC. And next one, that means NCC should be even more high probability trade setup supported zone. And next one is State Bank of India. See, State Bank of India, no, State Bank of India is not listed, right? Yes, that is what I am wondering. Where is that? I am searching where is the daily supply zone here. There is no daily supply zone. So State Bank of India is not listed. Next one is IGL. Sorry, Birla Soft. Birla Soft, let me open the Birla Soft, where it is? Here. The Birla Soft. See here we have a rally, we have a base candle, we have a drop candle with hidden body. And it is a rally candle from higher wick of the leg in, until the base candle. We have drawn the zone. See, this is the daily zone. This daily zone is having 75 minutes, and 75-minute zone is having this 15-minute zone confluence. But the question is, what about EMA? And if you add the buffer, I don't think this comes, this is somewhat not very close. Definitely this may not be listed. That we will see later. But according to my first impression, software may not list. It will add buffer, not this much. So mostly it will not be filtered. Next one is IGL. Is it IGL next one? No. Yeah, IGL is there. IGL daily zone. Is it rally based drop? I have some concern. Is software consider this as an imbalance started here? See, for our point of view, this is a small candle, but if imbalance is started, according to the software calculations, this could be a leg out candle. But according to us, this is a medium sized candle, but we will see in the software what it is suggesting in the daily zone. In the daily time frame, I am generating all supply demand zones. So we are looking for IGL. IGL demand zone is 1 to 2025, 2 base candles, 5 to 2025. Sorry, we have to look into supply zone, not demand zone. 5-1-2025, 4 base candles, 22-1-2025, 15-1, not 5-1, 15-1-2025, 4 base candles. Where is 15-1? This is the one, 15-1. We have 1, 2, 3, 4 base candles and a drop candle. So this is a pierced demand zone. This is the pierced demand zone. So it comes under pierced zone strategy, and this stock may not be accurate. The reason is this zone is pierced. So how we can eliminate this stock from our software? Simple. Add the pierced count 0 even in the daily reports. Observe carefully. In the in the pierced zones, in the daily time frame also, I am setting daily means HTF. HTF zone also should not be pierced, right? Why we are not setting every day for these zones is assuming mostly such kind of zones won't happen frequently, rarely happen. This is one such kind of stock. See, I added this daily count is also 00. The moment if I add, sorry, wrong report. Yeah, now let me set the pierced count, daily time frame, minimum value 0, maximum value 0. See, it is gone. We got only Birla Soft and NCC. IGL is not filtered. IGL is no more a high priority, high liquidity because daily zone is pierced. Because we didn't set the filter, by default it included the pierced zones on daily time frame. So that's why it is a pierced zone. If you draw, you know it is a pierced zone, then you won't consider this zone as a high priority zone. Only Birlasoft is high priority, high liquidity zone. Apart from that, what is the other one? NCC. So that's why let me move out of 6 stocks. Top is Birla priority, next NCC, and then Astral and State Bank of India. They are high priority because Astral and Astral is ITF zone having daily EMA. State Bank of India is also having ITF zone is having daily EMA confluence. That way these two are high priority. And Birlasoft LTF, ITF, HTF and also HTF EMA confluence. See, daily EMA confluence. Birlasoft. EMA confluence, did I say it? Where is the EMA confluence? This is zone confluence. This is pierced zone. I think EMA confluence we didn't set. Sorry. Now let us set EMA confluence on these 2 stocks. If that is the case, we won't get Birlasoft. If that is the case, Birlasoft should be within ITF related Birlasoft should not be displayed. It is a okay. Now I am setting EMA confluence on daily time frame, daily supply zone having daily EMA confluence. Birlasoft should not come. Huh? Birlasoft came. That means this buffer is good enough to calculate? Maybe. According to the software, this buffer is good enough to consider the zone confluence. But okay. Maybe my judgment is wrong. Because I am believing software, because software results are much accurate than human way of looking into the charts, especially the visual representation. Software understands better than the human. Because sometimes, when we zoom out, it looks very close. When you zoom in, it increasing the distance. So that's where our understanding will change. But anyway, this supplies this EMA within the buffer, whatever the buffer it will add before and after the zones. See, that's why it is, see here, moving around these EMA related prices. Went, came down again, moved, came down. At some point it will touch and then come down. Okay, this is about zone confluence and EMA confluence. Zone means LTF, ITF, HTF and HTF EMA confluence. So that is what you have seen in the picture. I do one thing. Birlasoft also, let me look into the HTF zone. Is there any LTF zones? We missed, but software considered. So Birlasoft, because I'm not able to convince myself that much buffer it has given software. That's why I want to cross check. So in the supply zone, it is a high liquidity supply zone, daily supply zone. When 6/1/2025, 4 base candles. I have drawn rally based drop. This is 23rd January. But software is suggesting 6/1/2025, 4 base candles. That means this zone could be LOTL zone. Where is 6/1/2025? This is the one. This is the drop. After that, 1, 2, 3, 4 base candles and a drop candle. If that is the case, this daily zone should be like this. Oh, this is the reason. See, it is having zone confluence. EMA. See, this is our way of understanding and mission way of understanding. Mission includes all those things we won't consider. See, the immediate zone rally based drop, that is what I considered. But what mission has done? It has considered this drop for base candles and drop. If that is the case, this rally based drop is a LOTL zone. And this is it violated? No, it is not violated. It just before the proximal line again came down. See, the proximal high of the proximal is 564.40 and high of this candle 564.25 paisa. This is high is 40 paisa but 25 paisa and came down, and again a new rally based drop is created. That means new order flow is again added. But this as a whole, this the main origin, this is the main origin, drop based drop is the main origin, and this origin is having a daily EMA confluence. See, earlier this rally based rally, why I didn't convince. See, the gap, okay, I'm wondering, because I developed the algorithm, I know this much gap is really, it was a concern. That's why I couldn't convince. Maybe something is there, something we are missing. That is what I thought. See, the moment we looked into the report, we got this stock. Drop based drop. Software, this is qualified. This is also okay. Drop 1, 2, 3, 4, 5 candles, base candles is also okay. But software is considered, this itself is a medium size like candle. Okay. Perfect. Now we can keep Birlasoft and NCC in the top list. These are all the monthly daily EMA confluence, and here 75 minutes with daily. Here daily zone with daily EMA, here 75 minutes zone with daily. Astral and State Bank of India. And IGL and IRFC, they don't have any EMA confluences. But some of these are already high liquidity zones. See, NCC is a high liquidity zone. But from the original list, you have, I think, one more high liquidity zone is there. Please look into the earlier recording so that you know how many high liquidity zones are there out of the 6 stocks. And what is the next step? Exactly the same way how you did for the demand zones. Which is the high liquidity here? NCC. Let me select NCC. Let me go to 15 minutes time frame. That is entry time frame. To plan a trade in this zone, it should have a fine-tuned 5-minute zone. Let's go to the 5 minutes time frame. Is it having any proper, let me hide. Okay, this is a rally candle. You have 1, 2, 3 base candles. A medium size like candle part of the base. That way you can consider. Definitely this is not a large candle, medium size. This is a 5-minute supply zone. See, here you have a rally, 1, 2, 3, 4 base candles and a drop candle with pro gap. Now let's go to the 15 minutes time frame. 15 minutes you can plan your trade. Where you can plan? Maybe in the Here itself you can plan, or you may wait until this 15 minutes, 5 minutes fine tune zone, depending on your risk management. So where you are planning is up to the risk management. It should not exceed beyond 2%. And what is the target so far? The target is still pro gap. This is a very interesting learning. Because there is a pro gap, your target should be up to, okay, sorry. Demand zone means it is a pro gap, not this. Sorry for my mistake, I have confused. Suppose if it is a demand, any demand zone trade, till pro gap it is. This is anyway supply zone. This entire orders in the pro gap has to be consumed. Then only prices will be reaching up to this 15 minutes target. But by the time prices are reaching, definitely new demand zones will be created. Till that new demand zones, you should have minimum 1:3 RR should be there. Otherwise, you can't plan the trade. Please remember those points. Already we discussed in the demand zone related. So far, the current any demand zone is there. We don't have any demand zone now here. Maybe previously some demand zones might be here. You have here 1 to 14 hours, 5 base candles. One, two. This is February. 1, 2 means it's going up. How? Some mistake. Oh, sorry. I am looking in 2025. This is 2024. 1st January 2024. 1st January? Sorry, 1st February. 1st February 2024, you have a zone, demand zone. That demand zone is our target. That means we have to go very back. 1st January. This is a 10th zone. First February, not January, 1st February. This is 2023. This is January. Where is February? 1st February. Okay, somewhere here. First February. 1, 2, 3, 4 base candles or 5 base candles? 5 base candles. So medium size candle it considered. But it is a pierced zone. But still, several times even it is pierced. So it could be pierced zones can be used as a target zones. Okay. This should be your target zone at present. See, at present this should be the target zone, but it is actually a pierced zone. So every time prices maybe below, there could be some traps will be there, a 5 minutes trap or something that is pushing again. Maybe higher time frame also might be there, a daily zone or 75 minute zone that also can be pushing the prices up. But anyway, at present this is the target. But before prices reach, new demand zones will be created, and at the time prices are entering into this 15 minute zone, wherever you define your entry, before reaching that entry, whatever the new nearest demand zone is there, that should be your target. Nearest 15 minutes demand zone, that should be your target. And till that nearest 15 minutes demand zone, a minimum 1:3 RR should be there. Let us assume some nearest demand zone, it is getting created here, let us assume. While prices are going up, so some rally to some base candles and rally. So from here to here, this 15 minutes zone, not fine-tuned 5-minute zone. From 15-minute zone to till this 15-minute zone, minimum 1:3 RR should be there. Then you have to plan your trade. And second thing, this should be within your 2% risk management. That is what you land in our checklist. Minimum 1:3 RR should be there. Maximum accepted risk should be within 2% of your trade capital. So these are the essential things you have to. And what is that we confirmed already? What we confirmed already is a remaining checklist. Candles are less than 6, our entry zone. Leg out is not sluggish. And that we didn't check, right? It's not sluggish. It is a drop and then follow through candle is again another drop. So it is not sluggish. Moreover, with pro gap it is there. It's a very powerful. High explosive leg out, that is. And what is the next zone achievement is there? Already we filtered based on that only. It is having a fresh fine-tuned zone. Yes, here we have the dark color zone is a fresh fine-tuned 5-minute zone. Is it having minimum 1:3 RR? That we can identify only when prices are nearing to this entry zone. As of now we have. But when a new zones are creating in the coming days before prices reach here, we may not be knowing. And 2% RR, that you know now itself. Because you can do the calculation. I am not doing because already we did the calculation in the demand zone example. Repeat the same what we did. That way you identify. That is the work now you have to do. And does the trade supports decision making table? Yes, our software itself is taken care by as per that. And we filtered based on more than 12 only. So we achieved. So some of the things we already taken care. So that means software maximum helped in reducing your manual effort. Now you have only a minimal effort that you should take care. That's it. Drawing the zones and checking whether ITF confluence is there or HTF confluence is there or EMA confluence is there. Such kind of checkings you can do. Quickly you can do. Already software is taking care of that. But you will cross check once again. The only thing you should additionally cross check, the ITF zones and HTF zones should not be pierced zones. See, that is what happened to earlier for IGL, right? That's why we didn't consider that. That I am not taking care while generating the reports. So that is the only one thing you should take care. Okay. And when we should not use these reports, this is the very important topic. We identified today, but when they are invalid, suppose, everybody please concentrate. This is a very important topic. So in the coming days, again let us assume a new 15-minute zone is created here. Inside the new 15-minute zone, a new 75-minute zone is created. I repeat again, a new 75. Inside 75, maybe new 15-minute zone will be there. Now prices retrace it to the new 75-minute zone. You can plan your trade in the newly created one. What about this one? This is no more valid. When a new 75-minute zone is created, this zone is no more valid. Why no more valid? Because if the newly created 75-minute zone is violated, what will happen to your trend? Your trend will be changed to sideways. Then this is now no more a bullish trade setup. Did you understand this point? That means these zones are valid as long as the new 75-minute zones are not created. If it is a bullish trade setup, new 75 minutes demand zone should not be created. If it is a bearish trade setup, new 75 minute supply zone should not be created. If they are created, the one we analyzed are no more valid. You cannot plan your trades in these zones. The reason is, if prices are reaching to this zone means the newly created zones would have been violated. Then only price reach here. When the newly created zones are violated, what does it mean? Now trend is changed. When trend is changed, they are no more valid bearish trade setup zones. Similarly, for demand zones also, there are no more valid bullish trade setups. So that means in bearish trade setup, I repeat, bearish trade setup, new 75-minute supply zones should not be created before they are reaching here. You must ensure no more new 75-minute supply zones are created. If they are created means after violation only prices will reach here. Similarly, for demand zones, new 75 minutes demand zone should be created. Let me go to 75 minutes time frame. New 75 minutes. See here, now we have a drop or maybe drop, base, rally is created. Say let us assume tomorrow rally is created. Then this is no more valid. Why? Suppose after few days prices reached this zone. That means what? This newly created drop base rally would have been violated. When it is violated, now the 75 minutes trend is changed from uptrend to sideways. When prices are reached here, this is no more a bullish trade setup. Because ITF trend is our real trend. See, 15-minute zones can be violated, but not 75-minute zone. Let us assume below there is one more 15-minute zone. If this is violated, our trade will be enabled. One more 15 just below this. But this 75-minute zone is violated. Now trend will be changed to sideways. This is a very, very important point. Everybody please remember this point. Many people, when you are using software reports, you make these mistakes. That's why every day I am generating new zones. Suppose a new 15-minute zone is created and that is having a new 15-minute zone. Then this zone won't be displayed next time. If our zone is not displayed, there are two reasons. One is maybe a new zone is created. Another reason, new zone is not created. Still, our software is not displayed means maybe our odd enhancer score might have been reduced. It may be. Why it will reduce? Maybe a new zones are created. Because of the new zones, there is not enough RR will be there. When because not RR, maybe it is not valid. But still it is valid for you. If you fine tune the zone and if you take a deep entry to the newly created zone, you may get the RR. That way you can consider. Even though software does not list, still you can consider. But if a new zone is created, new ITF zone is created, I repeat, new ITF zone is created, and because of that our software does not display, then ignore that stock. It is no more valid. So this is one important care you have to do. And same rules you can apply for other income trades also. Even though in the coming days I am going to explain other income trade analysis also. But remember, same analysis is applicable in all the income trades. So this is about how we can make use of NeoStock bullish or bearish trade setups for daily income trade. Next we will look into weekly income trade related stocks in the next video. Hope this information, this analysis will be useful to you to understand how best you can make use of our NeoStock software generated reports. You also might have understood how these NeoStock software generated reports are helping to improve your efficiency. I am not talking about the success rate, because success rate, whether you identify, NeoStock software identify, it does not change. Success rate will be there for more high liquidity zones compared to the normal zones. And even if normal zones, if zone confluence is there and EMA confluence, they have better success rate. But you can't compare with 80% success rate what you are achieving for 75 or daily high liquidity zone strategy related stocks. They are extraordinary. That strategy itself is a excellent strategy. You can't compare that strategy with other concepts. And unfortunately, that strategy is limited to only intraday related trading. Okay, hope this information will be useful to you. Let's all meet again in our next training session. Thank you.